12 12 12 12 12 2012. Time is 1:03 p.m. Pacific Standard Time. That's the closing bell in New York at 4:03 p.m. Eastern Time. One of the things that we're featuring is when we got deeply oversold and we talked about November December rally, and it all happened at Thanksgiving, is that we've had a 5-day extension. One of the key elements on the Dows that were coming up, we were deeply oversold right here. We got a 3-day buy signal on the Dow, but let me tell you something about this whole thing. And this includes every index. And let me tell you what's going to happen in part of December, but also starting calendar 2013. It doesn't matter if they come to an agreement or not. Because the way that we see the Dow here is that we basically have already got in part of your Christmas rally is already getting priced in. That's from the November. And what we're looking at is that we had an extension here, which we haven't seen since October now. And what does that mean? That's 1, 2, 3, 4, 5 up days. So right when we got above that 200-day moving average, right at that major resistance level, we've done something since we haven't done, I think it was back in October 16th or somewhere in that week, that we had 5 up days in a row. It is part of the December rally that stocks do well. However, with the fiscal cliff and all the headline volatility, and you had Bernanke out today, did his press conference about the FOMC and about rates and lots of other things. I don't need to go into that right now. I will tell you one thing, though, that if they come to a deal, the way that it'll work, and remember, this is before the fact, not after the fact, is that when they do pop that market is going to sell down. Why? Because when you raise taxes and there's less spending, that no matter what kind of deal they come to, they're going to have to take out those entitlements. And the thing about the market is, yes, they get a deal, yes, they get a pop, but then it's going to be sell the news. And as we come back up from these very bottom lows, deeply oversold, we got back to a 3-day buy signal on the Dow. Now, on the S&P 500, we talked about our target. Here is the trend line. There is a big, big, big trade on the S&P 500 put side. I talked about it coming up to our 1440 mark. The high of the S&P was 1438.59. And then it came back and faded in right here at a close of 1428, up 0.64. So basically, as the world and the world of volatility and high frequency computing algorithmic machines that have driven this higher, 1, 2, 3, 4, here is the 5th day. And basically you had a 5-day extension. As we had updated everyone clearly, it was time to get long the market. Didn't matter if they were going to come to a deal or not. We were deeply oversold from this big short that we did on the S&P, and we were coming right back up here to the neckline. Should there be any news and there's a pop-up to our 1440 mark, which is right here, the next area that I totally said was half of that bar, and that's going to be 1446 on the S&P. What will end up happening? As I show you here and now, this is a 119.1390 put on the S&P 500. I am a master at buying wholesale. And the more that they mark this thing down wholesale, and we will get that sell in January, no one's going to stop it. Because when they do come out with the deal isn't going to be good as everyone thinks originally or anticipated, but there's a lot of kinks in the deal. I can tell you as I go up to the wall of resistances, they have taken all the premium out of this put option right here during this rally up from here. And these were well above $50, $60, $70 a contract. That's the 1390 put. And as a matter of fact, there is a boatload of money that we're going to make on that. And we'll just put this out to all of our traders and other groups and all of our people around the world. Is the reason why you enjoy us so much is because we can tell you what happens before it happens. And There's a big fat trade on that news. So we're hitting that wall of resistance right now in the S&P 500. Nasdaq comp is same thing. We were deeply oversold down here. It was time to rally up with the gap. They got it right up here right now to a double top. One thing about the Nasdaq comp, it's a little bit more choppier than some of the others. And what we are looking for on any announcement is how we can get up to this 3066.78 resistance handle there. And we will on the news, but then be sold short right away. Nasdaq 100, I am proud to announce that I've got a 1222 put, $2,600 put on this Nasdaq 100. Let me tell you something, folks. We traded these all the way up to $30 and got out. They hit $4.80. I can tell you that this is going to be the cheapest side of the market. It's going to be the market that pays. We're hitting that wall of resistance. These hit 480 today. These things are so deflated in price, and what do I mean by that? Well, you'll have to stay tuned in the next series, but that is about to come up and challenge that 2700 area right here. And what we're looking for is if you can get it right here to that neckline of about 2725, 2723 on this Nasdaq 100. If this fails, at this current level, it was deeply oversold. There was a big trade. We had bought the 2,660 calls that were down at $7.50 and went up to $70. You had 30 of those contracts. That was well over a couple $100,000. It works both ways in bulls and bears. Those calls were deflated down here when we were oversold. It was time to have the calls. Now, you're back to the Nasdaq 100 with a slight daily buy signal at a major wall of resistance. The moral to the story and the hazard to the story for most people is that since we've had this rally, it's not like other November and December rallies, but part of it's already baked in the cake. If they don't do a deal, and even if they don't do a deal, we're going to sell off. But if they do a deal, they're going to pop it up and it's still going to sell off, because there's going to be a lot of headwinds in there. Small businesses, there's about 1 million of them. But you got to realize that out of a million of those small businesses, their incomes are well above $250,000 in S-Corps. And the thing about it is, it's going to hurt it. It's going to get choked. That means that all of what you see now is pure volatility. As I have said, you get oversold and stocks go up in November and December. However, we did this last year, a year ago, got net long, and we just went flying high through calendar 2012 with some good corrections. There's a lot of money to be made here, and there is. And what I'm giving is a major update to all traders and other people alike. And the thing about it is that 90% of the move, most of the people are always on the sideline. It's a high-frequency algorithmic program that is used in the cash futures market that bids those futures up, and you have stock futures that go up artificially in price. So how much of the real buyers in the market versus high-frequency computing machines that drive these prices higher, and there are various different techniques that are used. This is that Nasdaq 100, and we're at a major double top with the sell above the 200-day, above the 10-day, and the 20 days right down here below it. Yes, it was deeply oversold here, but now we have a buy signal. It's a daily, so it's worked its overbought level up back to these resistance levels. Any pop, they're going down. There's going to be a problem in the earnings section starting in the quarter coming up in January. We're still going to have contraction in the earnings cycle. And that means that the profits that are going to be reported are going to be lower. Not across the board. Some companies are going to do well. It's going to be a picker's market. Stock picker's market. What I'm telling people is that when they do sell these markets down, and when they do get on sale, It's going to be about a stock picker's market and only picking the quality, but you're going to have to learn how to manage the risk on both sides of the market, whether that's the long side or the short side. Both parties have equal amount of risk because the bull can get gapped down and the bear can get gapped up. Prior to these announcements, I'm telling everyone that no matter what kind of deal happens, is that you pop on the deal and then you're going to have selling come in. And that the latter part of December going into January could have and will have, not could have, will have another round of selling. Who wouldn't sell? If they don't come to a deal, everything's going to go higher, but it doesn't matter. They make the deal, we pop up, they're going to sell off, and there's a lot of reasons why. And I don't have to go into those reasons why. It's just that we're looking at the charts on all of them. So, S&P 500's played its course out. Here it is. Dow, Jones, and there are bulls, ETFs, that can buy puts on those because when those bulls go down, the bulls are up at the highs. So, certain ETFs, you can buy options on them. Calls when they're working good, but puts when they fail. And so having a diversification model is the key to success within the broader risk management of this market. And all of the volatility, all of the headlines, remember, it's not so much humans involved anymore. It's program scripts off of headlines, and they mark them up to sell them. This is your major update. These are the 4 indexes, FOMC meeting, and I'm telling you what happens irrespectively. Stocks are not on sale based on where we're at. That means when we were deeply down here oversold, that's time to be buying. But guess what? When we hit these wall of resistances up here and the whole fiasco of it all, they are going to sell this market down. Period. And there's a lot of headwinds within the volatility, the day-to-day headlines and whatnot. You mark them up, you take them higher, but net, you're a seller and you're a put buyer, and they go down in value. And it will come clear to you because today is 12/12. You just see what happens right after they make that deal when you get into January. And you remember this video and this update because you're going to come back to me and say, hey, how did you know that? It'll come clear to you.